All right. Okay, let's start. Yo, guys. Welcome to first live of this year, 2022. Uh, I hope you all are doing well and trading safely. January was quite interesting week. There was couple of big moves as well there. Hopefully you caught it. Yeah. So, but for me, yeah, I think we got. I have a few trades which I entered this week and few weeks before, but I will be discussing the last week's trades, right? And today, so we're going to talk about the next topic as well, which is in our course outline. Uh, Hello, GenFX. Hello, welcome, man. Right. So if you can chat in the chat room and saying everything, voice and stuffs are okay. Okay. So audio, video, is everything okay? Hello, John. All right. So other than this, I would like to thank the people who brought me a coffee. Uh, uh, I think last week, thanks to the Kelton Van Young who brought me a coffee. Appreciate it. And so yeah. So other than this, let me know how you are making a progress with the content. Is it helping you? What are the things that you're lacking? And what needs to be improved, so I will happily answer those in a DM and the stuff, right? So yeah, so let's get started. uh, you can write the questions in the chat room, and I will answer each and every questions at the end of the stream, right? So yeah, you can type the questions, and then we'll take it from the once we have over with the topics, right? All right. So the next topic was, I'm sorry. The next topic is the back testing and the forward testing, right? So why this is important and how you can do that, right? Okay. So by now you should know what is trading plan, what is trading models. I explained the trading models briefly, not briefly actually, quite in detail in the last video. If you don't know what is trading plan and what is trading models and what is the difference, so you can go back to those videos and come back here again, okay? Otherwise it won't make sense. You need to have concrete plan and model in order to back test. And if you are just backtesting for the sake of backtesting, it won't work. It's just as good as wasting a time, right? So yeah, so let's talk about the backtesting. Yeah. Now, so the backtesting, once you have a concrete plan and any at least one model, like either it will be the scalp, intraday or swing, at least one or maximum two. Okay. So prepare models based on your understanding and uh, what I taught in the course so far. And you should have at least, I would say, go for only one. Okay, so look one specific thing in the market as per your model. Okay, for example, let's say you come tomorrow and let's say develop. Okay, so I'm gonna look only New York, and I want to see this thing. Okay, and that's only one break. Okay, so just stick to that and backtest. For example, this is breakup structure, and I just want to trade this POI, or whether it's a scalp model or intraday or the swing. So stick to that for at least 6 months of a backtesting data, and you need to journal each and every single trade of that backtesting. And I will tell you why that's important. Okay, but so for example, you brought this, you created this model. Now it's just a matter of testing, and once you test it, unless you backtest it or forward test it, you won't be confident in the market. So you know and you will not find the edge. So you, in order to find edge over the market, you need to have these sessions before you go live. Okay, so once you have a trading plan and trading model in place, so now it's just matter of finding your edge, and that edge will come with experience, backtesting and forward testing. It's not easy, but it will be easy once you spend some screen time and backtest it, forward test it, and we're gonna dissect how you can do that, and how you can master it, right? So here's the first thing first, right? Yeah, so I will answer. Welcome, Zakir. I will answer all those questions. At the end of the at the end of this topic, right? Let me talk about the full topic, and then we'll go by question one by one, right? Cool. Now, so once you have a plan and model, let's say for example, I'm just taking this is an example. Okay, this could be your model, right? Okay, so what you're looking only for in the New York, when New York open, I am seeing this downward move, and I see one breakup structure, so I have POI now, right? So, and this POI, so with the in this POI, when the price, it's either you're gonna enter with the confirmation model or confirmation within confirmation model. So you need to have these models in place before you come and look for the charts, because it each and every single day you're looking the same thing, and once like it goes 28 29 days, it will become habit, and so you just don't need to do anything. Okay, you come any day, okay, what I'm looking for in the market, okay, so this is the thing that I'm looking for market, and this is my time. If it appears, you trade. It doesn't appear, you go away. As simple as that. Okay, but it just some emotional things get involved, and then it gets difficult. Okay, so that's why you need journaling, right? Because let's say for example, you have a model now and you have a trading plan as well, right? So, and you're gonna do at least 6 months of backtesting of any pair. Okay, so go with any one pair you're trading. So you shouldn't be trading more than two pairs, because it is really hard to focus if you have multiple pair, and if your focus isn't there 100%, so you're gonna lose. You're gonna make the silly mistakes, and then later on you realize, oh, I wasn't focusing on this, I was focusing on that. So, and it will be end up in some kind of tragic loss. So in order to avoid that, so you shouldn't be focusing at all more than two pairs. Okay, any two pair you choose it, and go with the multi time frame analysis that we do in weekly outlook or weekly forecast, right? Because and then only you understand where you are in the space in the market, right? So let's get back to the backtesting. So once you have plan and model, you pick 6 months of data, and you backtest that model and plan over that period of time. And what you're gonna do, each and every single trade you take on the backtesting session, you're gonna take before and after, and you're gonna compare with your rules, trading rules, and the trading models, and then only, because then only you're gonna find your mistakes, right? Otherwise, so if you're not journaling, that's why journaling is very important, because you know what is wrong and you can fix it. If you don't know what is wrong, no, I mean, it will be really hard to fix it, right? So in order to know what you're doing wrong, you need trade journaling. So I will come up with the topic about journaling, how to journal the trades and the stuff. I had a short video already there on the channel, uh, what to journal and what not to. That is template. You can take it as a template and build on top of that, right? So this is about the back testing. Yeah. So, and backtesting will, once like 6 months of backtesting has been done, so you need to calculate your win rate and your R. So one, and then only you go to the forward test. So now here we are. Okay, so let's say we are doing for example, we have plan model, and let's say I am doing a 6 months of backtesting data, and let's say I took in an average 5 to 10 trades in a month on my pair, and 6 months is kind of let's say 50-60 trades, okay, which is uh, which is a quite number, big number to analyze your mistakes and the stuff, right? So 50-60 trade data you have, so you're going to calculate your win rate, how many of trade that you win, and what's the reason, and how many trade you lost and what's the reason, right? And you're going to compare that data with your model and your plan. Have you followed the plan? So just making a plan is very easy, but sticking to the plan is really hard, because that's where edge is. Because let's say if you tested all this data and you find out, okay, my win rate is 65% and my our average R is 15R. 65% win rate and 15R, you're gonna make a lot of money in the market. Okay, in order to calculate this number, you need to go through the process, and it's very important. Okay, so that's why you should focus on the backtesting before anything else. Okay, don't go the live with this all the topics I taught. The process needs to be followed, otherwise you won't last more than 90 days in the market, I guarantee you. Okay, the process needs to be followed to the teeth, and then only with experience and the time you will see success, right? So this is about the back testing. Now let's talk about the forward testing, right? So what's the difference in the forward testing? Forward testing is taking a live, right? So for example, from today onwards, next month of February, I am doing forward testing. Doesn't matter it's a small account or demo account. Okay, only difference is that in forward testing, here you are involving your emotions, patience, and the time factor. Because on back testing, you will be just forwarding your candles. There is no emotion and the time factor involved. So in order to go through the entire process, you need to do at least a month of forward testing. I would say a 2 month would be better, and then do the same thing again. Okay, so in 2 months, let's say you have 20 trades, and calculate your win rate and uh, other stuff which we talk about journaling, right? Once you calculate these stuffs, and then you are ready, you're ready to go live, because you have a data, you have a past record, back testing and forward testing, you have your win rate, and you will not fear to execute any trade in the market on the live account once you go through all this process. Otherwise you will struggle, because you don't know what you are doing wrong, and if you don't know what you are doing wrong, so you will make same mistake again, unless, and then you will blow up your account, right? Yeah, so we don't want that, right? So we are better than that, so we are a step ahead, right? So we need to follow the process, and then it will come with the time and experience, right? Yeah, so the guys who are already joined, right, so you can type your question in the chat, so I will answer in the end. Okay, right, so this is about the back test and the forward test, how you can do that. Okay, let's say if you don't have the trading view premium or anything like, okay, so you can use trading view and simply go to, like, let's say for example this candle, and click here, so it will cut that data, and now you are live in the, like, it just like on that day, and you can just forward candle by candle. Okay, you follow your model, your time of entry, your trading plan, and the stuff execution as you define in the model, right? If you don't know how to create model and the stuff, I would suggest go back to my last video about trading models, and create your model and share with me your model, and I will see if there is something that could be improved, or and the stuff, right? So share me on Instagram DM what you're looking into the market every single day. Once you have model, you should only looking those things, and anything else doesn't matter to you now, right? So that's one thing. If you don't have your trading view premium plan, so what you can do, you can get their 30-day trial. 30-day is more than enough to backtest your 6 months or more than years data, right? So probably you will end up with because you cannot go too far from 1 minute on the previous data, on this trading view. But you get the point, right? So we need that data in order to justify you can go to the live account, and then you can take it forward from there, right? Okay, so now if you have any questions related to backtesting and forward testing, you can comment on this video. I will include this video about into the playlist of our course, as well as in the live session, right? So this is about the backtesting and forward testing. And next thing I'm going to talk about the EU trades, the couple of trades that I took last week, but they both are failed. But that doesn't mean that we didn't make any money, right? So this one was on the 4-hour POI, and this one was from the 10 hours, right? So I already shared that into the Telegram, what I was looking for. We'll go through it and what happened, and and what we're looking from now. Okay. Yeah. So it was I think on this day it was like that when I took that trade. Right. So what I was looking here, okay, this is on the 10-hour chart. We got this breakup structure here, yeah, and mitigation of that breakup structure, and we got again new breakup structures. This is low, this is high. So I was looking to trade this point of interest, and during my with my model and the trading plan, right? So when the price hit my alarm triggers, and I was active on the New York, I trade only New York, right? All right, so here's the thing. Okay, so this is how you break down. So once the point of this is hit to your POI, it hit here as well, but we don't have breakup structure, right? So we don't have your model here, so you don't take a trade. So once it does hit here, and we got first break here, yeah, and I was looking to trade this point of interest on 15 second, I think, probably, yeah. So according to our model, okay, so if you have only one break, what we do, we confirm again and again. Okay, so when the price hit this 15-second POI, I went to, I think, 5 second. So let's cut it here, okay, and then look for our entry model, right? So now right? So we have only one break here, and price hit our point of interest, and we're looking here confirmation, again confirmation on the lower time frame, which is on the 5 second. Yeah, you with me, right? Okay, so you have any question, ask there. Now, so you got reaction here, but there isn't any our entry model to enter. I can't just enter from here because it's just one break, and it's too risky. Okay, I need that confirmation again, and see, and then price come again to the same POI, and this time actually. So what just happened here? Okay, so this was the low. Let me mark it, okay, on the brush. So this was a low, this was high. Okay, so this low was taken out here, and who took that low? This one, this point of interest. Okay, and then again we have new breakup structure here. So this is our confirmation model, which is confirmed. So this new breakup structure came from here. So my entry was actually here manual execution, because it was too fast, entry was slightly off, and my stops would be above this, but I put it here, actually I put it above all, this high, and the entry was a little up. So that was an execution, manual execution, and it just triggered, I mean it is manual execution, and it went from, oh sorry, it just stopped the trading view error, but it just went from, no, it just freeze. Oh, let me just refresh it. Okay, so sorry about that, this is not my mistake, it's just trading view doesn't behave sometimes. Okay, so let me go back to where we are. I think we were here somewhere, and on 1 minute. Yeah, right. So this was our entry on the 5 second that I explained, right? And we took a manual entry here, and as soon as it break it, this low, right? So this is what my thinking was. Okay, so again it taking time, come on. Okay, let me again refresh. Sorry about this is trading view stop. Okay, that's not in my control, but let me again try to go with directly 1 minute. Okay, yeah. Okay, so as soon as we break this one, uh, and we got the pullback. So why I make trade break even here and why not here? Because there isn't two break, and this second break happened here, and there was clear cut this order block that needs to be mitigated, but price didn't come here and break the new structure, and when it break the new structure, then only I got break even. Okay, and then it just went for my partial points here, and it reverted. So I took some money out from here when it reached here. There was another entry here with this, our confirmation model, two breaks, one break, two break, and this was the third break. Yeah, and this was clear cut POI from this point. Okay, but I was in from here, so I just couldn't scale in, I just couldn't bother to take the trade from there. And now it just went to partial point, and then it reversed completely. So yeah, so I think I closed next day some money from here, and it is then the break even, I just hit the break even, and then it just went up from there with the NFV and the Friday news. So this was actually EU trade, right? Now we are here at the point on the daily POI. We are in the daily point of interest, and we are still looking for sell, and this will be nice actually sell for the next week. So this will have clear cut one break structure, and we have this order block to play, and all these imbalances needs to be filled, and we are in daily POI. So if it break this one, so it's gonna break this one, the daily low. So just keep that in mind. So there will be very nice week ahead, uh, starting from tomorrow, right? And you just need to be patient and wait until your model is present in the POI, and then take an execution, right? So yeah, so this is about I was trying to explain. I took the trade from here as well on the 4 hour. It's the same thing happened. It didn't work out, follow through. We got the reaction, but we didn't got the follow through. And this is the last point I'm looking for sale actually. And then This is extreme POI. If it didn't work, so it's probably gonna become up to here, and then we'll look for reaction on this, study the reaction up from this POI, and then we can take it from there. Yeah. All right, so this is about the last week's couple of trades that I took on the EU. They didn't work out fully, but yeah, so it is what it is, right? So let's go through the questions then. You put the questions into the live chat, and then I will answer every single question. All right. Okay, so let me go to the list. Zakir is saying, is it possible to focus on one pair and hunt it each day, not waiting for major POI points for many currencies? Yes, that's the absolute point, Zakir. Because if you focus on one or two pairs, you have your attention 100% to those, rather than trading all 28 pairs. And when your attention is 100%, your focus is 100%, you tend to make less mistakes than when you're not there 100%. So this is where we're doing here, trading like 1 2 3 4 5 pip stops. So there is very less room for the mistakes. Your mistake means a loss, and we don't want losses, right? So this is, you don't want to lose your capital, right? So your main aim is to protect your capital here in this market and find your edge. So I would say, it's fine, just trade only one pair. Like, let's say for example you're trading Asia, so go with a pound yen or any Asian pair. Or you're trading London, to go with pound dollar, or in New York euro dollar or pound dollar. Okay, they do work, play out in New York and London as well. So there was a question from Zakir. I hope I answered your question. And so the next question from this is actually, TradingView doesn't allow a bar reply up to 1 minute more than a month, right? Yeah, so that's true actually. So then actually you do a month of testing for few different pairs. So for example, euro dollar, let's say you do 4 or 5 dollar pair for a month. It's just same concept. You have your trading model, you have everything, so that is in the place. It's just now finding, back testing, and matter of finding your edge and model, right? And then you can take it from there. So if TradingView allowing only one month of backtesting data on the 1 minute, then just go with let's say for example you go with euro dollar, pound dollar, New Zealand dollar, Aussie dollar, 4 pair, and then that will be enough actually. Yeah. So, and yeah, so the next question, how can I backtest even with premium if the data you are looking exceeds 1 month? It will show up to you in up to 15 minutes. Oh, I don't understand the question. How can I backtest even with premium if the data you are looking exceeds 1 month? It will show. No, actually I talked about it, right? So if it is on the 1 month, you can go to the 6 months on 1 month of different pair. Okay. How can I back test this strategy? Halogen FX. Yeah, so Halogen FX, let's say for example you have a model, trading model in place, and your trading plan. Okay. and your model says, for example, okay, so I am halogen fx and I am gonna look only this thing into the market, and that's my model. And when the price reach here, for example, let's say uh, yeah, so let's say for price reach here, I'm gonna look on the 1 minute or a confirmation model, and when we get the confirmation model, I'm gonna look on 15 second again confirmation model, and then I'm gonna take buy from there. So that's only I'm looking. Okay, so if this is present, I am taking execution. If it doesn't give me any entry, I'm not taking execution. So this is how your model should be actually. You have, for example, this one or two or three models. I would say at least one or maximum two models, and then you can take it from there. Okay, so yeah, so you just finding your personal preference, what time you're gonna trade and the stuff, and which model, your scalp intraday or the swing. Yeah, so and that's how you backtest as well. So you go with the 6 months of data with six different pair, or 1 month of data and six different pair, and you look exact specific same thing, and then you can calculate your win rate, rather than looking all 100 things into the different market, and not following through, right? So yeah, so that's how you backtest the strategy, right? And just remember, only backtesting is not enough. So you need to forward test at least a month, in order to go live. Okay, otherwise you don't, if you don't know your data, like how much your hit rate, how much your win rate, what is your R, what is your emotional state and the stuff, you will make same mistake again and you will blow up your account. Okay, so this market is not meant to win for everyone. Okay, so it's not designed to, it is designed to fail. So we're trying to develop an edge over the market, which is extremely difficult, but it's not impossible. Okay, yeah, so I hope this answers your question. The next question, right? Okay, so how do you trade, it's from Tedwards. How do we trade a counter trend moves? Right, so counter trend, if you are new to Edwards, I would say, go with uh, with trend, which is a 4 hour plus or daily. So take a trade in the direction of 4 hour or daily. So whether it's a scalp trade or intraday, or the stuff, because you will have possibility of that daily move. Counter trend, if you are like trading a 6 months or more and you have consistent result with your uh, with trend trade, or the higher time frame narrative, then you can look for counter trend and practice there on the counter trend. Counter trends are risky because you are guessing lows and high there, with the counter trend, and guessing lows and high is a bit of risky, and we're talking about here 1 2 3 4 5 pips stop. So you will be, it's extremely risky, but yeah, you can take it. For example, like this was actually in the last week, which is counter trend, right? So we were extremely bearish, heavily bearish here, for example, when this happened on EU, right? Look at this now. So taking buy here is guessing low, because we don't know when it's gonna stop. And if you want to take a counter trend, this is counter trend move. That's what happened on the EU. So this is first break of structure. You can take this trade from this POI and confirm again on the lower time frame, and that's the only way you can avoid your loss. Otherwise, it's extremely risky. But yeah, you can try it out. You can have a counter trend model. What you are gonna look for your trade, and then you can take it from there, right? uh, Yeah, so that, I hope this answer your question, Tedward. Yeah. Then Halogen again saying, can you talk more about how to pass prop pump challenge using this strategy? Yeah, you can use this strategy for anything. Like if you have personal account, the prop pump challenge, or anything. So that's the thing, Halogen. So what you need to do, you need to find your model, backtest it, forward test it, and you have at least 60-70 trades of data. Once you have 60-70 trade of data, so you know now what is your win rate, what is your R, and which pair you are trading, and you just follow that same process with your prop firm account or any account. It will work. It doesn't matter. Prop firm, only you need to worry about their specific rules. Some prop firms have news trading and the stop rules, so you need to go through their rules and follow their rules. If you have personal account, so you should actually follow the rules, that rule on your personal account as well, because it will make uh, it will bring discipline in you. And if you don't have discipline, then this is not a field for not undisciplined, or not a people who doesn't have a discipline. Okay, so this is extremely rule based, or you need to have extremely discipline what you're going to look into. You shouldn't be throwing your capital like just like that. Okay, so it's just your hard earned money. You need to find your model first, backtest that model and the plan, and then go to the live. Okay, any prop firm, you if you are trying to take, let's say for example, FTMO or any prop firm, so take their free trial, and then talk about that, right? So then take a couple of more free, and then check it out, what's going on there, right? And then you can take the live challenge. Okay, I hope this answer your question. Mohammed Faizan saying, please make more videos. Yes, Mohammed, so I will be, yeah, I'll be making videos. So I think the course is almost completed. There are few videos that I am going to bring about the pop firms and the brokers and the frequently asked questions, FAQs. So that will keep coming, and as soon as I have, like, any new update into the strategy, that will also will be the here on the channel. And this is all just I'm not selling you anything. Okay, you just don't need to take anything from me. It's just all free stuff, premium content, but I'm giving it free for the people who are willing to put their time and effort. Okay, and they cannot afford, for the people who cannot afford like €1,000 or more hefty prices courses. Okay, so this is for them actually. Yeah, other than this, then yeah, I will. And also, I will make shorts video on the trades that I take during the week. uh, and you will know now exactly what model I am following. I already explained my model into the trading model videos, and you will see that model into each and every trade that I take. Go back and check my previous trades as well, so they are following exact same thing, right? Yeah, so I hope this answer questions. And then the next question is, when trading scalp model, do you consider higher time frame trend? No, scalp model, what do you see in the scalp, right? Scalp model, scalp trade is needs to be taken during the first 2 hours of session opens, so London Open and New York Open. If you find an entry, then only, because the big liquidity will come into those hours, right? And you need to be extremely cautious to move your stops to break even when trading the scalp. Okay, if you're taking a scalp in the direction of the swing, then you can hold it, that trade for more longer, because there is a potential for that trade to happen. More money will will be generated there. Yeah. But if you're taking just a scalp based on your just 5 minute direction, so you need to be wary about your targets. Okay, so your target should be 5 minute high or low, whatever you're taking, or you're taking on 1 minute, or it's a 1 minute high or low. So you shouldn't be expecting a scalp go to the 100 hour and 50 hour. It will go when if it will go when you take a scalp in the direction of swing. Okay, because there is a potential that higher time frame play will happen during that hour. So you can make model around that as well, like so let's say for example you're trading only scalp in the direction of swing, and that's only your trading, and what you're looking, okay, double BOS with mitigation, that's it. If you see this stuff, then only you're gonna take trade, otherwise you're not gonna take trade. So you form your own model. I shared these, just don't follow mine, okay, because they may not work for you. uh, I shared my model because you can build on top of that, okay, and that's the way to go, because you should be independent when it comes to trading. You shouldn't be rely on any person's plan or model, because they may not fit you, because your circumstances are different than mine, right? So you need to find your own rule set of rules, your own set of plan, and own set of model, and then you can test that model, back test and forward test, and then you can go to the live. Just don't rush the process. If you rush the process, you will come back to again that point. Okay. Yeah. So yeah, so next question, can you talk about more on psychology, because it is my biggest problem. Yeah, so if you have a rules, right? Rules for your entry, rules for your model, rules for your trading plan, risk management and trade management. You need to, this is what we are doing here. I am trying to make a rule based system, so that you won't be involved in the emotions. If you are not following your plan, and you're taking a, let's say, 10 trade in a day, it tells me you are just trading impulsively or emotionally, and that it needs to be stopped. The market is not for those people who are impulsive. I'm saying big red candle, I'm going to sell now. No, it's not going to work. If you chase the market, you will definitely die. So you just create a rule and follow that rule. If your rule present, take the execution. If rule doesn't present, do not take the execution. And you shouldn't be taking a more than let's say 4 to 5 trades in a week. 4 to 5 trades, it means, let's say you're risking 1%, you're risking 5% in a week, and that's also is high. So if you go with 0.5% with the big account, it's okay. Yeah. So yeah, so make a rule based your plan, and rule based your entry model, and then only take the execution. So before that, you need to backtest your stuff. Otherwise, because you don't know, uh, what is your hit rate, what is your win rate, and the stuff, and what is your R. Right. So in order to know that, so you need to build your model and backtest those models. Right. So Anand P saying, uh, please explain one more time invalidation point. Okay. So invalidation point. Let's say this is an example. Okay. So what do we see here, Anand? Okay. So we have this break of structure. So this is one. So this is on 10-hour chart. You can use any hour. Okay. So this is not the low on the 10 hours. The low is here, but it doesn't change the narrative, right? So the narrative is same. So we got the first break of structure, and we have this order block, the green candle, which is mitigated here, and we got new break of structure. So the point of mitigation is your point of invalidation. Is as simple as that. It's just don't make a complicated, right? Okay. So what invalidation point is your point of mitigation. If price breaks this, it will invalidate the setup, and you not no longer the cells are no longer on table. That's it. That simple is that. Okay, so you need to find the mitigation. Always find the mitigation which is an order flow. Order flow is more important than the structures. Structures are just yeah, they are important, but order flow has more weightage than the structure. And order flow will be invalidated when your mitigation is no longer respected. So what is mitigation? Mitigation is like big banks, hedge funds, and the stubs. Okay, the people who have like billions of dollars and millions they put into the market, they want to mitigate their orders in order to have smaller loss or stuff. If that mitigation is not respected, then what's going to happen? So they are probably changing the directions. So we just need to follow the big boys, okay, and ride on piggy. And it will come with experience. It's just not that simple, but it needs some screen time and chart time, but you will get it. Okay, so don't worry. So the next UD, okay, thanks for joining, man. Driving, can't ask any questions, but I am learning. Yeah, no worry, appreciate it. Take it easy. uh, the last one saying okay, please, on the last time I don't know how to identify low. You said using the last candle body, but I don't understand. So so let's go through that. Okay, uh, how to identify low? Okay, so like let's say for example this is high, right? Now you just go candle by candle and look a low of a candle broken by body. Yeah, so go left. See here, low of the candle is broken by this red candle, so technically take that low here. So that's the low. So let me find a better example. Uh, well, that was on our entry, right? uh, okay, so let's go here. Let's say for example, okay, so this is your high, so it is low. So you go back with the candle, and what you look for, low of a candle broken by this red candle. So this is your low. Now again, not this one. Now you understand, right? On this time frame, right? So low of a candle, previous candle is broken by this body of this candle, the current candle. So this is how you do it. So for example, now on this one, right? So let's say this is the break of structure. Where it came from? You go again up, and then you find the low of the here high of the candle broken by body. So this is high of the candle, and this is broken by body, and this is high. Yeah, so that's how you do. I will make a short video probably. I'm getting a DMs on the same questions, but this is a crucial to understand solidified lows and highs. Not any lows and high will be respected. So that's what I'm trying to say. It's looks simple, but it you know it needs details. Actually, you need to have details in your mind. Is it really low or not? So we have clear cut rules on that. So you just follow that. Okay, so I'll probably make a very short video or maybe a TikTok video on that, and then you can ask questions there as well. Yeah, so basically you need to understand these lows and highs, how they works, and then you will be fine. Okay, so some people asked me last week, oh, why this is not low on this time frame. Okay, so this this one and this candle and this new break of structure. Why this is not break? See, where is a candle break here? If you go, this is low. Where is a high of a candle broken by body? Here. Yeah, this high of a candle broken by body here. So that's high. Not this one. This is just base. Okay, this will be there on the 4 hour. Yeah, but not on this time frame, right? So that's how you need to build a narrative. And in order to build the narrative, you need to have clear cut understanding of lows and highs. Yeah. All right. So I think, yeah, I mean, I if you don't have any more questions, we're gonna if you have any more questions, you can put into the chat box. And if you don't, you can DM me on Telegram or Instagram, and we can take it from there. One more thing, actually, I'm going to keep adding the videos on the FAQs and the next topics. If you guys want any specific topic to be covered, you can mention me on Instagram, or maybe, yeah, so Instagram DM or here on the chat box as well, that the topic that you are struggling with and not understood truly. Okay, so there are already, I think, almost 90 videos on YouTube, right? So I have explained the, the these lows and highs and these topics multiple times on multiple videos. But you still don't understand that, I can take it in the next, in the FAQs and the stuff session, when it comes there, right? But if you're liking this content, your like and sub will be appreciated. And so if you want to support more, you can buy me a coffee, the link in the description. If you don't have any more questions, then I will take a leave then. I'll talk you then on the weekly forecast video, right? And then we'll take it from there. Okay, take it easy and Jai Hind.